The season of anyhowness appears to be nearing its end, with the wave of reform sweeping across sectors. Regulators are going hard on compliance, agencies are expanding their oversight, and as my guest specifically put it, raising the stakes for operational transparency and accountability. From insurance to oil and gas and even small and medium enterprises, everyone is getting a slice of this pie when it comes to reforms. But how are the businesses dealing with the intensifying pressure to meet up with regulatory standards? And more importantly, how can companies in Nigeria navigate regulation without sacrificing innovation? We have Kenechukwu Ohiaeri, a product design leader and strategist. He joins us now from Abuja to share his insights. A pleasure to have you in.
Okay.
All right, briefly give us a picture of just how businesses are faring with the pressure to meet up with some of the new regulatory standards, and how could this perhaps even affect businesses? What's at stake here?
So the current regulatory reforms, most businesses see it as a roadblock to them thriving or scaling up activities. But I think the notion here that they should see it as an opportunity to drive innovation. Most recently, you've heard about the Insurance Industry Reforms Act. This particular regulation is aimed at increasing the trust in the insurance industry. And while it may seem like a difficult thing for the existing players in the space, I think it's a perfect opportunity for those who want to break into the market and create more innovative products like digitizing insurance, making sure it's not just for enterprises, but bringing it down to the layman, to the SMEs on the streets, automating things like claims and also audit reports for the regulatory body. So most of all these things are some of the opportunities that companies need to see with all these reforms. For me, reform means building trust. And if trust is being built, then a market exists and we can try from there.
Into the opportunities therein, you have pointed out that these reforms are, to build trust, especially between customers and the companies themselves. But then there are those who are saying that, this wave of reforms is too strong, it's too much, too soon. Do you feel that the pace of reforms that we're seeing and the introduction of several regulations should be perhaps, spaced so that the businesses are not crushed with dealing with too much too soon?
Well, if we study closely, most of all these reforms have implementation timelines, so they are not telling you or forcing you to get in shape today or lose your business. There is a space that allows companies to build themselves up to be able to meet up to these expectations. So I think there is enough time for companies to brace up. It's not an impact, but I think it's the best thing to do for us to be able to reach our esteemed goal of being a $1 trillion economy.
All right. Again, you seem to be pointing so much at the opportunities, and we'll get into the opportunities as well after this break, as well as the sectors and companies that you think are more at risk. Stay with us, Kenechukwu. You're still watching Business Edge, and we are talking about how businesses can perhaps even adjust to the wave of reforms. We have insurance reforms, banking sector reforms, tax reforms, and it's the businesses, the companies that are going to have to navigate their way around this, especially when it comes to compliance. We do have Kenechukwu Ohiaeri, product design leader and strategist, joining us now. And he has provided some perspective, but we're going to dive deeper, with you, Kenechukwu, and specifically now looking at the companies that are more at risk with this wave of reforms. What type of companies, what sectors do you identify as being more at risk?
Well, most of the companies that may look like they are at risk are maybe new entrants into the industries. So we could take another case in point, the 2023 Data Protection Act, where you get companies who did not initially take cybersecurity as a core component of their operations, now taking it seriously. these have created gaps for people who have neglected some regulations or some part of rules to help them operate very well. Another case in point could be with the also recently active open banking ecosystem. This would pose a risk to, let's say, loan apps or credit givers who do not follow the guidelines to assessing the financial data of people. They could also be at risk to going against regulatory guidelines. Also, one also interesting is the banking recapitalization program, where you see banks who do not meet up to the capital requirements either get absorbed by bigger banks or M&A activities sprouting every single place to make sure that they meet the guidelines set by the CBN. So most of the people who fail or who might be at risk are people who have initially ignored or didn't put in compliance as their first rule, having to run around to meet it at a later stage when it's almost too late.
Yes, and as you have pointed out, there are deadlines, but you've also highlighted the opportunities earlier on. The reality is a lot of business may not be able to handle the pressure. Many may pack up, and we do have reports that a large percentage of businesses have packed up, in the last 2 years for different reasons. How do you think businesses can perhaps even navigate and make sure that they survive and perhaps even ride this wave of reforms? What are the opportunities?
The opportunities are countless. One major one is the fact that creating these regulations or reforms infuses trust into the market. So if businesses from day one take compliance as a key factor when building out their products, when delivering out their services, I think they will be at the forefront. They should be able to outlast this wave of reforms. If we dive deeper to highlight the opportunities for each of these industries, you could also see, for example, for the open banking sector, you could see the opportunities lies where players can be able to access financial data of people, and this will help them in credit risking, in making sure that people who they give out credits to are going to pay back in due time. We could also see in situations where there is some uprising activities in the Nigerian stock markets, where because of all these M&A and major acquisitions that banks have been doing, you could see the success of GTCO in the London Stock Exchange. It has brought up the need for people to use digital services. So once companies understand all this, they can be able to say, if we take compliance as our day one activities, we can be able to provide trust to our customers, we can be able to provide trust to our investors, we can be able to break into the market using digital services, innovate on what they're currently doing, which may be manual, make it simpler, make it automated, and also make sure that they abide by the rules set by their regulating body.
It's all about building trust. But RegTech, that's another term that I was introduced to, regulation or regulatory technology. Let us into that, RegTech, how it's being adopted by companies to drive compliance, with these regulations and reforms.
Yeah, so it's with the emergence of RegTech, you're seeing that companies who need to comply as soon as possible may not have the required infrastructure to be able to do that. So startups or innovators have seen that as a market opportunity. So they now provide what we may call ancillary services to these companies, where they can help companies provide KYC verifications, help companies provide anti-money laundering audits. They can help companies to provide the most recently interesting one, e-invoicing. So innovators in this space have identified opportunities where they can help businesses to comply with the regulatory bodies. And with that, you've seen a boost or an uproar of RegTech products everywhere.
I mean, interesting to see how that is also further adopted. But speaking of compliance, just a little bit more, we have companies, their leadership may, be able to have a grip on the regulation, but that it's happening at the top doesn't mean the employees will not err. So how can we work out that synergy that, yes, from the top, they're aware of the regulations, they're sticking to the reforms, but they also have a handle of their employees, and the employees don't err and somewhat implicate them. So how can we have that harmonization and synergy within a business, within an organization?
I think the most important thing to have that synergy within a business is to drive education reform. So within a company, you could take on trainings, IT trainings, compliance trainings to make sure that employees of a business comply to rules and regulations set by their regulatory body. So with this, I think employees should be able to keep up to speed, because I know a lot is happening very fast. So the best move is to educate them, bring them up to speed, and as a whole company, they work with one synergy.
All right, thank you so much for your time, Kenechukwu Ohiaeri, Product Design Leader and Strategist. It was a pleasure getting your perspective on this conversation, and obviously the larger article that you did write that piqued our interest. Thank you for joining us.
Thanks so much for having me. Right. Bye now.
Business Edge continues right here on New Central Television. And, there's a lot happening. We'll bring you more reports in just a moment.